Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everybody. Welcome back to another live stream. Happy Monday to you. What a crazy couple days it has been. Precious metals, of course, having the big meltdown on Friday and some follow-through, some rough follow-through here over the weekend session. Also, yes, please don't spam the chat, guys. It does make it hard to keep up with everyone's comments. I know there's a lot of questions. I'll do my best to get to as many as possible, but we've got a lot of stuff to discuss, a lot of charts to get through. So without further ado, let's jump right into it. Nick, will there be a COT report data drop this week and next coming weeks? Government is on partial lockdown. I believe, yes, there will be. I think that there was a partial shutdown, but I think that they resolved it last minute. So I think we're still perfectly fine on that. So let's talk a little bit about what's been going on here. You've got U.S. stocks pretty much flat. It's really interesting what took place on the Sunday open this week, Asian session. We saw S&P 500 drop as far as 1.4% from Friday's close. Pretty sharp drop there. We saw, of course, over the weekend, NASDAQ also having a sharp intra-day decline over the Asian session, though U.S. markets are going to open up with NASDAQ just only down about 0.4% at this time. Gold and silver, of course, following through to the downside and looking rough, man. It is, I mean, really, we have to take a look at this and say, well, we're really just kind of recapturing or coming back down to where we were, what, 12 days ago, 13 days ago? While this is definitely a very painful and pretty crushing blow to a lot of people who chase the price towards the top, you know, this is still kind of in the realm of normality when it comes to a longer term upward trend remaining intact in gold. The way I would quantify that would be, pull open your moving averages and you can see we're in the process of currently retesting the 50-day moving average. Unbelievable that it took this kind of drop just to get back to the 50-day moving average. But maybe that suggests just how overbought, how overstretched to the upside gold and silver were. Now, if you watch my channel, if you watch my videos regularly, you know that I don't really believe in trying to time tops and bottoms or call something overbought to the point that I actually want to short it. I just don't do that with, with my active trading. I just don't do that. So when I look at this, I say, okay, well, clearly the market was overstretched. We didn't know when it was going to topple over, but we knew it was overstretched. And likely when you have markets that are overstretched, you have a sharp correction. It is a natural breathe in, breathe out mechanic of the markets. People who were very leveraged up here, who were chasing this, unfortunately learned probably some very painful lessons about the way financial markets can behave. You had a very, very sharp correction, and it's sort of got a real catalyst to it. I've seen a lot of people kind of dismissing, this is just a fake out. It's going to rebound. It's going to come right back up. It could, but I think to just completely dismiss the reason that precious metals sold off so violently is a little bit disingenuous. Let me express what I'm talking about here. The dollar index had a sharp rebound on Thursday and Friday of last week's trading session, because the new Fed chair is perceived as a safe bet, quote unquote, for Fed independence and inflation considerations. Now, I went on a rant on Sunday on my video about why I thought this might be, why I think the market actually likes this selection. And when I say the market, I'm not talking about precious metals. Obviously, they hate this. The stock market might not necessarily love this. What I'm referencing is the bond market. The bond market's not too worried about this. You saw, the reaction to Kevin Warsh being selected as Fed chair as kind of a perfectly fine event. Now, had you seen what you're looking at, the US 10-year yield, had you seen that blow out to the upside, if yields had skyrocketed on the selection of Kevin Warsh, that would tell you that the market does not trust the selection. But because yields pretty much stayed stagnant and didn't move too much, that tells you the bond market's like, all right, cool. He's trustworthy. Again, what does trustworthy do to the dollar? Well, for now, it's causing a bounce. And that bounce could continue to put ample pressure on the precious metals trade. Again, part of the reason, not the only reason, but a chunk of the reason gold exploded higher is the worries around Fed independence, the worries that the Trump administration would put someone in that sort of would just do the bidding of Trump, no question, just cut rates, cut rates, cut rates. And instead, the selection of Kevin Warsh is perceived, at least what the bond market is telling us, not necessarily getting my political opinions or anything in there. The bond market tells you, okay, he's fine. And so that little admission by the bond market is going a very long way because it makes the US dollar, US treasuries, etc., perhaps a safer bet and could slow the rush into precious metals. To me, when we were seeing this rally higher, I kept saying, I don't know what causes this thing to roll over. I don't have a good reason to short gold. I don't have a good reason fundamentally or macro wise to really get outright bearish on gold. Well, on Thursday and Friday, we got two big ones. Well, we got multiple big ones, three big ones. I talked about it in the video on Sunday. The three big ones, margin requirements from the COMEX went up. That is super bearish for gold, historically speaking. That puts, it threatens leverage, which is a part of this game, right? Leverage is a part of the run up. The next one was Fed share Warsh, hawkish, protective on inflation, and inflation hawk. Not a big fan of QE. Now, why would Trump and team put him in there? I made this claim in my Sunday video, and I'll say it again. I think that was a Scott Besson play. Scott Besson is his background is in the financial markets, hedge fund manager. He's a smart dude. And he knows that if you put someone in that is unbelievably dovish, it dramatically threatens the security, the trustability of the U.S. Treasury market. Treasury Secretary probably weighed in big on who the next Fed chair was. And I think they said the market will be okay with this guy and it won't freak out and disrupt the administration's goals of getting interest rates down. So I think it was a smart pick, personally. And I think that's my opinion. I think Trump was probably fine with him, but and he does issue the idea of wanting to ease monetary policy. But I think, you look at the guy's history, he's not an ultra dove. So at the same time, finally, what's the third one? Well, there's a couple more that we could go, but I'm trying to get through the big ones, right? Fed chair, Warsh would potentially be a hawkish, or more hawkish. I should say more hawkish than expected, right? More hawkish than expected. So bond market sort of liking this, holding steady with it, margin requirements looking okay, dollar strength coming back into the picture, and just good straight up euphoria being slashed, right? You had a ton of leverage, a ton of bullish bets. It didn't take much for this thing to crater, right? And just continue to see deleveraging, liquidity, stop outs getting rolled into more stop outs, etc. liquidity event, all kind of hitting at the same time. Oh, and not I forget, of course, PPI year over year came in hot. So we had higher than expected inflation. That's interest rate bullish, or I'm sorry, interest rate yields higher. Not great for gold. Euphoria, getting slashed. All kind of this stuff coming to a head at once. Big selling in gold led to further selling and further selling. Fed Chair Warsh, we saw the follow through in crypto. This is the market telling you, all right, that new Fed chair may not be the ultra dove that people were thinking might be coming in. So people selling some risk assets, and then the margin requirements. That's my take on it. That's my, and I've seen so many people dispute and debate. Oh, it was all because the COMEX scammed us, or it was just a euphoria event. And I've seen people kind of taking one of these things and just saying that's the reason. But I do think personally that the real reason that gold had such a dramatic and ridiculous drop, same with silver. Silver was more ridiculous. Silver was down another 16% overnight. I don't know if you guys caught that. The reason it was so violent to the downside is because all of these things sort of fell at the same time. It was drop after drop. Oh, and then also there was a little bit of de-escalation stuff that took place in Iran. De-escalation. I mean, when you talk about a market that is pumping up, like really killing it, flying high, you get all this stuff kind of coming at once, is like a full-blown attack on precious metals. And so when people say, you know, it's a scam, you know, manipulation, that's the only reason it's down, I don't think so. I think that there's a very good reason for why the euphoria popped, right? Gold and silver can have bubbles too. And this is coming from somebody who was bullish on gold, riding the upward trend and facing the facts that the markets have now changed. The dynamic has shifted. Am I overtly bearish on gold? No. But I'm very cautious on this market now. There's been several factors that have changed, and they happened all at once, causing the sharp drop. Thought there was no reason to dump? Well, there wasn't, right? But again, good trading is being the type of person that is open-minded to say, things have changed. Trail out. I trailed out of my trade. I stopped out of the position, took profits on it. And I'm glad that I did, because conditions have changed. And I don't think that the easy money in gold, I think the easy money in gold is now behind us, right? I think that you need, you know, to address some of these things before gold can just rally back through the highs. Higher inflation, a Fed chair that's unlikely to dramatically cut interest rates. Yeah, these are things. Why are we sugarcoating this? Idiots got liquidated. Bala, I think that's not the right way to speak about it. Everyone learns in the markets. Doesn't necessarily make them an idiot, right? If you think about it, people who, if you're somebody who got really hurt in gold and you just started trading 3 weeks ago, you're not an idiot. You're just a human. You're just experiencing what markets do. They get really exciting. Euphoria can lead into very painful drawdowns, right? We got to speak kindly about the realities of trading. Everyone goes through, you know, dealing with the pain of being wrong, or the pain of, you know, etc. Anyways, let's take a look at a couple other markets. The dollar index, I think, has some legs to it, although I wouldn't be surprised if, you know, after the market has kind of digested this, if you do get a little bit of selling pressure coming in on the dollar, you have major resistance overhead at around 98. Dollar index looks really strong. You've got a really strong resistance, though, at that 61.8% retracement, just shy around 98 on the DXY. So I'd watch that. There are a couple currency pairs that I like with the dollar index, like, for example, the Kiwi dollar, Aussie dollar, pound dollar. I think that you have a couple selections here that look better than others. The New Zealand dollar versus the US dollar looks really strong. I bet you it is pulling back here recently. Where's my NZD USD? Yeah, NCD USD pulling back here a little bit. Still a ways away from a spot that I could grab at some potential longs. But if you did get a deeper retracement, that would be much more of a sharp upside move in the dollar to get us there, right? You'd probably be looking at up here 99.5. So probably not a setup for me right away, but we also said AUD USD might be a setup to look out for. A pullback here into this area, again, kind of far away. Pound US dollar, let's see. Yeah, this one looks a little bit more attractive to me. The 61.8% retracement, I could see potentially taking a long stab around there, and that could get there in a hurry. The dollar, the way the dollar's been moving, I mean, you are having a rip your face off rally in the dollar right now in response to the Fed chair. And again, I think these are the types of catalysts that can cause turns on a dime, hence why we saw precious metals and gold make such violent precious metals and dollar make such violent moves Thursday, Friday. US oil is also down pretty good today. I've had some questions about people asking me if I want to, be long oil, and I will just say, as far as I know, last time I checked, we had a pretty neutral reading on commodities. Let's just take a look at oil. Yeah, oil's getting a neutral reading for me. So I'm going to probably skip on that one. However, this week's pretty loaded. We have NFP reports coming out on Friday, unemployment claims on Thursday, and probably a bunch of other stuff. So long story short, one of my concerns right now is that S&P 500 getting a bearish reading on EdgeFinder. Very interesting to get that. And same too with the Dow Jones. Take a look at Dow getting a -7 read on EdgeFinder. A lot of the struggle, though, is that we have a pretty weak or signs of a weakening labor market. We also have that producer price index number come in higher than expected. So when I look at this, I say, okay, that potentially tells me that I want to be real cautious about getting too bullish on, tech stocks, on stocks in general. If I take a look at S&P 500, you are getting a really sharp rebound here. I would not personally take any sort of short positions on the S&P 500 unless you were to get a sharp break to the downside that starts failing at some of these areas where you've previously had sharp buying, right? But I do want to add it to my watch list. And it is rare for S&P 500 to get a bearish reading on S&P 500. It's been in, just such a solid upward trend. I'm not willing to step in front of it and try and short this thing right now. But if you were to start seeing failure, right, at major levels of support, if you started losing 6,800, 6,900, et cetera, if you start losing those levels, then perhaps you start to get this shelf that we could maybe look at establishing some short positions. That's what I'm looking at. Very rare for me to want to be more bearish on the indices, but I see a lot of potential headwinds for the market right now. And from a technical perspective, I still think you have a solid uptrend, so I don't want to fight that. But could we get sort of a retest of the 200-day moving average? We've gone a very long stretch where we have not retested the 200-day moving average. From here, you're talking about a 6.5% drop in the S&P 500 to get that 200-day moving average retest. If I did take a short position, it would be small and it would be with a tight stop, and it would probably just be looking for a leg lower in the market. And if it did take place, again, it would have to be after a break of structure. I'm not shorting this thing in an uptrend, right? You start seeing failure, like a big leg lower retest, would be looking for that follow through. And it would just be a real small short size position if I were to get that setup going. So that's one of my setups in the next weeks or two to see what happens with S&P 500. What could get us there? Really poor jobs numbers could get us there. Concerns about the economy really slowing could get us there. But we're getting the reads on EdgeFinder. Technicals have started to filter a bit lower here, and we'll keep an eye on that. Can you show the put to call ratio of gold and silver and tell me something about it? Yeah, let's take a look at that. Crowd sentiment put call ratio. Let's see what we've got. So first of all, S&P 500 put call ratio, very middle ground here right now, just while we're on the subject. That's of course Friday's trading data. Let's take a look at gold here. And what we can see here, gold has got a pretty neutral put call ratio. So this is telling me, if you want me to explain it, this is basically saying pretty neutral. Not there was a lot of trading volume in the last few days in gold and silver. Interestingly, you had a lot of put volume actually right ahead of the sell-off, but now kind of in neutral territory. So not extreme enough for me to get a contrarian signal out of this. Silver, let's take a look here. Silver still in neutral camp as well. So I'd be looking for, in terms of a bullish signal, I'd be wanting to see this thing shoot higher. And for a bearish signal, I'd be wanting to see this thing shoot lower. Now, if you've never used the put call ratio before, it's a really simple indicator. It looks at options volume for the selected symbol. So in this case, we're looking at silver's put to call ratio. Are people buying calls? Are people buying puts? It's using SLV, which has recently been very heavily traded. And so what we can see here is that volume is sort of mixed right now. You have a lot of people betting against, a lot of people betting in favor of, so not a strong enough contrarian read one or the other. So when I say I like it, the contrarian read, let's say that you get a huge surge in put volume, meaning crowd sentiment just goes wildly bearish on silver. If that takes place, I would read that as a slightly more contrarian bullish signal. If this thing were to do the opposite and drop dramatically on the put call, showing a huge surge in call volume coming in, I would take that as more of a contrarian bearish signal. And that's exactly how the EdgeFinder's algorithm, when it looks at put call ratio for all the different symbols, that's how it factors in if something is, or to give another couple points of score to or away from a particular asset. So when we go take a look at the top setups page, what you can see here is that there is a crowd sentiment column right here. And you can see that scores have been populated in for all the different assets, right? Gold, S&P 500, Dow Jones, etc. Well, that score is automated. It is, all of these scores are automated. It is looking at a whole collection of economic data. It's looking at a collection of crowd sentiment. In this case, the put call ratio is what we're discussing. So it's looking across the put call ratio for all of them. Yeah. It's annoying how some of us avoided gold and silver altogether. We're still affected by its crash on other assets. Yeah, I mean, the thing is, the crazy thing, right, is that markets are so interconnected. Fundamentals, and once you understand macro, like what you realize is markets are all connected. Like if you're trading gold, you're also trading S&P. If you're trading S&P, you're also trading the dollar. If you're trading the dollar, like to some capacity, markets are all impacted by the same thing. Like it's the same reason why if Trump says something crazy, right, it causes all of the markets to move. Markets are all sensitive to the same general stuff, like the big picture stuff. What's the Federal Reserve doing? What's the economies of the world looking like? Major leaders doing something or saying something that shocks the market, right? Those are all, impacting, those forces are impacting all of the charts that we watch. So even if you don't trade gold, if gold drops off the face of the earth for a certain reason that also impacts something that you trade or watch, it absolutely matters, right? So if anything, the way to think about that is what happened on Thursday and Friday was really a dollar move. Gold and silver just took the biggest tumble, right, and got all the attention. And look at that, gold's still moving. The story was the dollar, right? The dollar belief in essentially Fed independence being upheld, strengthened the dollar due to the idea of the new Fed chair being more willing to defend on the inflation front than perhaps we would have gotten with someone like Kevin Hassett, Rick Reeder, etc. Right? So that slightly more hawkish than expected, I think it's a very real force. Like, I don't think people, I discussed it on Sunday in my video, really looking at the bond market. Like the move that we saw in gold and silver, obviously that's flashy, that's exciting. Oh my gosh, gold, silver making these moves. Very exciting, very crazy moves. But the reason is because the bond market is the most important market. I say it all the time. It's the most important market to watch because it impacts everything else. If people were freaked out about the new Fed chair, you might have seen up 10% on gold. Well, maybe the market was expecting a very dovish person, so probably not 10%. If the market's already expecting it, maybe you saw a 3% move higher on Kevin Hassett, Rick Reeder, et cetera, somebody who would have been perceived as way more dovish. But because the market was expecting that, and then you got someone who historically has been more in favor of being more hawkish and anti-QE, he also believes that the Fed should be less transparent about what it plans to do, which has pros and cons. The market said, oh, that's incredibly dollar bullish. That gives reprieve, that gives console to people who internationally buy US bonds, the Japanese, the Chinese, all these other foreign European nations, many nations that buy US treasuries probably look favorable at a Kevin Warsh. They probably say, that's way better. We feel more trusting of US treasuries in that circumstance than had you put someone in there who's just going to cut rates to appease Donald Trump. Again, Fed independence being upheld is what, in my opinion, was the biggest catalyst for gold and silver to move lower. It's not the only thing. There's a lot of different things, right? I think I'm not trying to call you out, but I think this is exactly the wrong idea. He picked him because he listens. I actually think you're gonna get, again, if Trump administration was not smart with what their selection was, I think they would have chosen somebody who was an ultra dove who would just cut rates in line. We explained this earlier. The pick for Warsh was actually kind of 200 IQ, in my opinion. People expected Trump and team to put in somebody who's just gonna, when Trump says jump, the guy, jumps up, right? I think that Kevin Warsh is not going to be so easily told what to do by the president. Historically, the dude's been around. Like he's been a Fed governor. Like he's an intelligent dude. He helped in the recovery of the 2008 financial crisis, and he's been an advocate for less QE, which is less money printing, which is again kind of the criticisms of the Trump administration. He's also an inflation hawk in his rhetoric over many years. So he's worried about inflation. Those two things, you might say, well, then why did the Trump administration pick it? Again, my theory is that Scott Bessent, the Treasury Secretary, said, we need the bond market to trust us. We can't put someone in there who's just going to cut, because it's going to cause distrust in the dollar, distrust in the US. And so they picked someone who's actually going to guard the keys to the castle. So that was why it was so incredibly dollar bullish. A huge move. 2% move is a big move for a currency. I think it was a wise pick. That's my personal opinion. I think they played the right call there. So yeah, I don't think it's a puppet for, I think it's a good Fed chair pick. That's my personal opinion on it. I think it was a wise move. And I think that's why gold and silver moved so violently, is because it was a strong play for the dollar. How long is the term that a Fed chair serves? Actually, I'm not sure. Is it 6 years? Is it 8 years? Somebody let us know. I forgot what the number is. JP Morgan closed out of their short. Yeah, they probably took the opportunity, right? They had big shorts on silver, took the opportunity to close out of there. Kind of crazy. Yeah, so the question is, do I see silver and gold rebounding? Here's my opinion on it. I think that I said this on Friday or on my videos over the weekend. I think the path of least resistance is actually sideways. Like, I know there's a lot of people who think like, oh, it's going to have a very sharp rebound. There's also a lot of people who think it's going to have a very sharp crash and keep going. My personal opinion, and of course, I'm open-minded to something changing, as always. Right now, though, path of least resistance, in my opinion, is just to stay kind of put on gold and silver. I think that was a very serious catalyst for dollar strength. However, I still see some troubles with dollar strength on the macroeconomic data. So if I'm looking at dollar first, I'm saying dollar kind of still leans bearish on some of the macro, but then this story here has recently caused an uptick in dollar. So my opinion, short-term dollar strength, and then, looking for some potential short setups on the dollar, to kind of go with that. But if I take a look at my asset scorecard here really quick, we can take a look at US dollar. US dollar has actually jumped up here in score back into neutral camp. So I'm going to keep an eye on it. I'm just going to kind of follow along with that neutral reading. I would be curious to see this week, as we have a lot of jobs data, how that impacts things. If you get a very solid jobs report this week, gold and silver could continue lower on a strong dollar, and vice versa. Recently the jobs market bias has been pretty bearish, right? So I kind of think that, if the trend is your friend on that one, that you could have continued weak jobs numbers. But if you got the surprise, that would cause a very sharp uptick in dollar index. S&P 500, NASDAQ, they just opened up. So we'll see what happens on that front. By the way, if you guys are not in our free Telegram channel, there is so much stuff going on in markets right now. We're keeping everyone updated to the best of our ability. We're posting regular updates in there on a macro front and technical front, as well as trade setups. Scan the QR code that's right below my camera here, or hit the link that's going to be dropped in the live stream chat. There it is. You can scan that QR code or click that link to join our free Telegram channel. We do giveaways in there. We do updates on what's happening on the markets, trade ideas, so on and so forth. So if you're not already in there, take a second to make sure you join our free Telegram channel for updates throughout this really critical week. Again, precious metals will be covering extensively on what's the latest on this one. But again, for now, technical chart to me looks pretty broken. The clear and obvious upward trend, I think, is no longer there. At least in terms of 4-hour daily chart sort of uptrend. I think on a longer term chart, if you're looking at the weekly, I think you're still intact here, and there may be some buy the dip type of people in there that are looking to take advantage of these quote unquote cheaper prices. I mean, you still have gold and silver trading at very high levels, but maybe people who have been really bullish on it will take the opportunity. Personally, like I said, I'm neutral on them. I'm going to kind of wait to see what happens with jobs market data. I don't have a strong conviction one way or the other. I traded gold to the upside. I loved the run up. It was a wonderful trade idea, but my system was way more in favor of being bullish at the end of last year. So I actually bought the retest on, let me go back to gold. Here's where I took a trade. I bought right around here and I rode that up, and then I trailed my stop loss, and I was very fortunate to get out when I did. I got out right around there, around $5,200 an ounce. And I'm very glad that I did when I did. I took profits on that move, and I'm resetting. So I'm not long on gold. I'm not short. I currently have a neutral overall reading with my system. You can see the EdgeFinder score over time. If we look back end of last year, we had really bullish readings coming in, higher scores for EdgeFinder during that time. That's when I went long. Recently, we have gone way more neutral, and now I'm just kind of sitting still, waiting patiently for the right setup to come my way with gold and silver. It's more likely that my next trade would be a long setup than a short setup, as we have technicals still in a longer term upward trend. But it's really difficult for me to say exactly when that would be. So yeah. Nick, Aussie Swiss, I've seen your comment a few times. Thank you for your patience. I'll take a look at Aussie Swiss really quick. So overall, I've got a really strong reading on Aussie Swiss. If I take a look at this one, would have to wait for a pullback though. It's too strong for me right now. If you're in it, awesome. I think it has upside. Trend looks amazing. Very strong currency pair against the Swiss franc. And I like the Australian dollar right now. Pullbacks on this one would be interesting, but nothing right here, right? This pair has upside, in my opinion, could keep going. We never know for certain, but probabilities, path of least resistance, I think your trend here to the upside has legs to run with it. Let's also just take a quick look on the macro side. I think we have somebody coming up next, but I'm not sure when they're going to get here. We're just waiting on our next show host, so we've got a minute. If I look at economic surprise index, let's take a look at some things. The Australian dollar's got a strong reading. Most of its metrics here recently outperforming expectations on the economic data front. I know this always looks like a foreign language when you first open up this page and you're like, what the heck are you looking at? I'll explain it really simply here. The economic surprise index looks at all of our major currencies, and it says what percentage of their economic metrics are coming in strong for the currency versus weak for the currency. And so if you have a strong reading like New Zealand dollar, or if you have South African rand, actually, the Australian dollar, high scores, UK, right, British pound, these are indicating currencies that are beating their economic forecasts, right? Economists try and project like, hey, what's inflation going to be? Hey, what's jobs numbers going to be? What are PMIs going to look like for these different economies? And without getting into the weeds of it, a higher reading means that they are upsetting the expectations. They're beating expectations. They're stronger than anticipated. So these, in my view, would be currencies that have stronger backing for short-term trades. Does that make sense? It's one of my favorite indicators. And this scoring thought process is also built into the top setups algorithm. So when you see a top setup for Aussie Swiss, why is Aussie Swiss getting a strong reading? Well, we're talking about a currency that has a strong outperformance recently versus a currency that has a underperformance to economic projections recently. Does that make sense? So that is my thought process on Aussie Swiss. Is it's got nice macroeconomic data to support strength for the Aussie and a technical uptrend that looks very strong. My friend Forex James, he is long NZD CHF for a very similar reason, right? Go back to our chart here. Which currency is strong? New Zealand dollar. Which currency is weak? Swiss franc. Forex James he is an OG EdgeFinder trader. I don't know if you guys knew that. He's been using it for a long time, and he sends me messages all the time. He's like, oh, pound Aussie short, Kiwi yen. I could just sit back. At this point, what I could do, don't tell him this. I could just sit back and just wait for him to message me and be like, all right, thanks for the trade idea, and then go take the trade, and then I'll just sit on the beach and sip pina coladas. What am I doing all this work for? I got Forex James to watch. I'm just kidding, of course, but it is interesting, right? You've got a really simple metric here, looking at economic data from a bird's eye view and saying which ones are strong, which ones are weak. Keep it simple. So, yeah, I do like the Kiwi and the Aussie dollar versus the Swiss franc, especially. Those are really interesting trades. Dollar Swiss franc also. I don't like the technicals on this one. I know Alan and Marco, they took a stab at trying to get long this one. I believe they took out very small stops on these. So I think they did perfectly fine trying to catch that low. But of course, dollar fell out and is now trying to rebound. I think if you want to be bullish on this currency pair from a shorter term trading perspective, longer term, you're talking about, I think it's at like decade lows. Yeah, it's like really, really low point here. From a trading perspective, I'd like to see this thing start to recapture some areas of support, past resistance turn support. Like if you started to see this, hey, maybe we have something here where the technicals start to form a bullish bias. But yeah, I'm just a little bit cautious on this one for now. Again, based on this list, I'm going to be looking, I don't really trade the South African rand, but the New Zealand dollar, the euro, the Aussie, the British pound, Swiss franc. What does euro Swiss franc look like? Interesting. Euro Swiss franc, little sharp rebound here today. But yeah, I've got some currencies we're going to continue watching. Let me just check. Splitting Ivan segment between yourself and Marco. Marco's coming in at 9:45. Cool. Sounds good. Yeah. So dollar, in my opinion, still is kind of on a heater from the news. But if you still see dollar strength in the next couple days, again, NFP could change things, but my bias just slightly cautious on dollar here. But again, if you get a strong NFP report, we could go dollar bullish. Like it could flip. Like I'm pretty neutral on an absolute basis. And I think that's important. There's a lot of people who are perma something, right? They're perma bullish, perma bearish. Somebody who looks at gold and they can't possibly see a bearish setup, or somebody who looks at the dollar and can't possibly see a bullish setup. Like, you start looking at these things and you say, smart traders, smart investors are agnostic to direction. They are highly open-minded to what's coming their way. So if you're looking at, if you just have this staunch belief that AI is the future and the NASDAQ should go up every day, you're going to get in trouble when the NASDAQ has a normal, painful but normal 20% drawdown. If you're leveraged, if you can't see the bigger picture and say, hey, sometimes I'm wrong, sometimes my timing is off, I need to reset or recalibrate or even flip my directional bias. If you can't do that, it's a matter of time before the market really humbles you, because nothing is going to trade in a straight line. Nothing's going to be perfect. And so, I have a slightly bearish leaning look at the S&P 500, but the price doesn't agree with me. So I'm not going to go shorting the S&P 500 right here. If you were to see a failure at support, I could potentially look at some small short side action moves to the downside in S&P 500. If we were to fail at major levels of support, I could maybe see actually taking that short trade, being open-minded to what my system is telling me. You guys know I love buying stocks. Like, I love being long S&P 500. It's one of my favorite trades. It fits well within my strategy. But right now, indices are getting a pretty rough picture. Now, the big one that I keep saying is Friday you have NFP, which could change things. And I could, come on here today and say, S&P looks a little weak to me. And then NFP comes in rock star, better than expected slightly. And on Friday, I could say stocks look bullish. Sometimes people get, that's kind of a weird experience for me. On my channel, I guess there's a lot of people who are very emotionally bullish or bearish on a particular asset: dollar, gold, NASDAQ, S&P 500, oil. There's people who have like a very, maybe even like a vendetta against a particular asset. And let me just share this word of wisdom from doing this so long. If you hate trading gold, or you really don't like trading the dollar pairs, or you think the yen pairs are manipulated, let that go in 2026. The markets don't care about you. They're not coming for your dollar. I mean, they are, but not necessarily you individually. So let me express this. I have a slightly bearish tilt on S&P 500 and Dow Jones right now. And the DAX, for that matter. DAX just broke. I don't know if you guys saw this. DAX broke a level of support. Well, it tried to. We'll see actually what happens. Looks like it's rebounding now by the time I said that. So never mind. But if you were to see this thing start to fail out, and you have, macro that's starting to show inflation still kind of sticky, jobs data is not particularly great, being open-minded is a superpower in trading that a lot of people never unlock, because a lot of people are so bent on being right and beating some sort of chart that has taken money from them in the past that they will not acknowledge what's in front of them. If you're somebody who hates the stock market and is permanently bearish because it's taken money from you when you were short in the past, and you just keep shorting and shorting and shorting, you're probably blinded by that emotion that you have, to the point that you're not able to actually just capitalize on setups that you're seeing in front of your eyes, right? So be open-minded. If you've said in the past, oh, I hate trading gold, it has a personal thing against me, I don't know, let that go. That will hold you back, I'm telling you. If you say, I think this has to happen and I know it's going to happen, and you are refusing to acknowledge when you're wrong, that will get you into a lot of trouble. Flip it around for just a quick second, then we're going to pass the show over to Marco. If you're the type of person that can adapt and be open-minded and say, oh, I'm a dummy, I was wrong, stop out, get out of there, reset, and find the next trade and capitalize on it, you can go really far in the markets. Listen to investors, traders alike at the top of their game, and you will see ego is missing from it. Ego is dangerous because great traders know they don't know for sure what's going to happen. Poor traders claim they know exactly what's going to happen all the time. Those people get destroyed in markets with enough time and with enough, crazy moves in the market. They won't last. People who have the humility to say, I don't know for certain, so let me take a small trade and let me stop out if I'm wrong. Or I thought it was going to go up, but then it completely reversed lower and now it's trending down. And even the macro or the things that I look at are starting to point bearish. If you ignore that voice of reason and you start saying, no, it's going to go back up because, it took my money and I'm not going to let it trick me. Let that go, man. I'm telling you, you'll be better off. Let that go. Be open-minded. It will serve you better. It's a little trick in trading is the more open-minded you are, willing to acknowledge that you were wrong and readjust. It's a superpower in trading. The people who have no room for that in their trading will lose everything. Look at their P&Ls. They'll act all tough, all smart. Oh, I knew it. Look how good I am. They'll never show you their P&L because, again, the P&L will reflect what I'm talking about here. Unwillingness to be wrong is devastating in the long run in trading. Anyways, with that said, up next, we have Marco from Marco's Trading Journey taking over the stream, talking a little bit of chart setups that he's watching at this time. With that said, if you guys want to join our free Telegram channel, I mentioned it earlier, join us in Telegram. We've got a lot of stuff coming out, a lot of data dropping this week, a lot of news, a lot of coverage on what's happening with, the Fed chair and what's happening in Iran. We're doing our best to keep you guys with little bias, no political bias or anything like that. Just market commentary. We're trying to keep you up to date in our free Telegram channel. The link has been dropped in the chat. Join us there for updates. Up next, Marco from Marco's Trading Journey. Stay tuned. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the live stream. So I hope everyone is doing well. Before we get started, the A1 team has just received more free DNA funded challenges to give away to you guys. So in order to participate in the giveaway, I'll copy the link to a form. It's a JOT form. Let's do copy. And I'm gonna paste it in the comment section below. So click on the form, fill it out, and in around 15 to 20 minutes, let me set a reminder actually, because I sometimes forget. So let's do DNA codes in, let's say, 15 minutes. Okay, in 15 minutes, we will get all the names, put them in the wheel of names, and then we will get our winner. After my segment, I will personally email you with the free code. So what do I have for you? I have 10K one-phase accounts and 5K one-phase accounts. I have a lot of them, so make sure you guys participate. Now, back to the charts. So as far as the charts go, as far as trading goes, hope you haven't spent the whole weekend reading the Epstein files and that you actually did some work on trading. As far as what happened on Friday, we had a massive drop. Just one winner for the stream. So one winner per stream, okay? But I stream every day, 5 days per week. You can find my schedule, my live streaming schedule in the A1 live stream schedule. So today I'm on at 9:45. Tomorrow I'm on at 10:15. Wednesday, 9 a.m. Thursday, 10 a.m. And Friday, it's going to be 10 a.m. as well. That's all Eastern Standard Time. So massive correction on gold, massive correction on silver. Looks like today we had a bigger retrace, but then we went back to break even. So we're kind of hovering around the open. I want to get in. So I want to buy I want to buy gold, but I don't think this is the good level at the moment. Let's see, EdgeFinder, gold. Neutral reading on gold. We had a bullish reading at the start of today, I believe, but looks like we have flipped to neutral. Here is what I'm looking for. I'm looking for the price to go above the 20 EMA on the daily chart. I would like to see that. And then second, I would like to get a bullish reading on the EdgeFinder. And maybe the third thing, I would like to get a blue candle on the daily chart as well. So I don't want to see a lot of red candles on the daily. I would like to get a bit of a rejection. So the perfect scenario would be tomorrow we go bullish, we close bullish, and I get a bullish reading right here. Then I think it's worth the risk. I think it's worth taking a stab at a gold long. I do have a support level that I like in this area. So right here, this area, will we reach it? Maybe. I mean, this is a pretty big correction. This is a pretty big crash. What I don't like to see as far as technical analysis goes is I don't like to see this sort of a waterfall of just massive moves. I would like to see maybe a bit of a slowdown. You know, that would be a bit better. Fundamentally, though, gold is still super bullish. So fundamentally, my stance, my analysis has not changed on gold. Inflation is high in the United States. We're getting rate cuts in the United States. We're getting dovish central banks in most of the world. We're getting uncertainty with Iran, Venezuela, Trump, Russia, Europe, Greenland. Uncertainty, of course, is great for gold and silver. And if you have been paying attention to what is happening in China, I think they have a massive debt crisis with real estate, and essentially their currency, the Chinese yuan, is losing a lot of value, and a lot of people are going into gold. So a lot of people in China are buying a lot of gold, and it is presumed that they will continue to buy gold in 2026. So there is massive overall demand for gold in China. That's the state of the world at the moment. That is the current narrative, and I think this just goes up. As far as silver goes, not my favorite. I mean, this is a pretty nice discount, I'm not gonna lie. This is a massive discount. The last short attempt that I had was right here, so we are back at the level where I went short. Yeah, just around that level. But I prefer gold. I know there's a massive demand for solar panels. So essentially, silver is used for solar panels, and that should be bullish for silver. But silver is slowly getting replaced by copper. Copper can also be used for production of solar panels. Gold, purely an investment asset, investment vehicle. Again, just a clean demand from China, clean demand all over the world. The fundamentals seem a bit more straightforward, and I do definitely want to get in. So that's the game plan. Of course, if I take a position, you will get notified in the A1 trading Discord. All of my trades get put in the A1 Discord. All of my analysis, fundamental event breakdowns, and you have the trading chat, which is full of great traders and some pretty funny memes. So if you want to join the A1 Discord, there's a link in the description, and you can use the code Marco to get, I think we have 40% off running this month. I'm not exactly sure, but most of the time my code gets you 25%. And then on special months, you get 40% discount. So check it out. Link is in the description if you want to learn how to trade from me and of course from Nick, Iwind, Chris Pulver, and Alan, right? That's the gang. As far as positions go, I have only one at the moment. I have the Nikkei position open. By the way, let me just copy the jot form once again. If anyone missed it, if you want to get a free DNA funded challenge, there is a link in the comment section. click the link, fill out the form, and you'll get put into the wheel of names. And in 10 minutes, I will announce the winner of the free challenge. So after my segment ends, I will personally email you the code. So make sure you fill it out. And by the way, if you want to get funded with DNA, code A1Live gets you 25% off any DNA funded challenge. Just as a reminder. So this is a special code for you guys watching the live streams. A1 Live, 25% off, DNA funded. Take a look. This is my only position. This was, of course, a signal in the A1 Discord, and I'm still in. Doesn't look so amazing, but it's in profit, so I can't complain. I'm planning to trail my stop loss. So if the price wants to continue going higher, I'll put my stop loss below the swing lows. That's my game plan. That's my game plan for the Nikkei. So just leaving it alone for now. Aussie dollar, I love. I would love to get a buy setup. Let me see EdgeFinder. What do we have? AUD USD. Bullish reading, amazing. I love the Aussie. It is the only central bank that is planning to raise interest rates. You know what that means? It means Aussie goes up in value. Fed is planning to cut rates, which means dollar goes down in value. So love the Aussie. I would love to get a pullback to the 20 MA. And then it's game on. Game on to look for a buy setup. By the way, if you haven't followed the developments, I'm sure Nick talked about it, but there's a new guy replacing Powell. It's not 100% confirmed, but most likely it's going to happen. So that is going to be Kevin Warsh. I made a full post about it in the A1 Discord, and I made a post detailing the impact on the markets. But essentially, this is a pretty safe pick. So it's kind of weird that Trump picked Kevin Warsh, because Trump is usually not a conventional guy, and he likes to mess with, let's say, everyone, especially mess with the markets. It's pretty weird that he picked such a safe pick as Kevin Warsh. Kevin Warsh is also known as more of a hawk than a dove. So he's kind of similar to Powell, old school Wall Street guy, old school economist. I think he's in politics as well, but he definitely knows a lot about the economy. So I think this is a good pick. It's a safe pick, and it creates more certainty. So once the news was out, gold started pulling back and the dollar started catching a bid. So this new Fed chairman announcement creates certainty in the markets, because people are looking at the States and they're saying, Kevin Warsh, not such a crazy pick. That's actually looking good for the US economy. So they're buying the dollar, they're selling gold. Stock market, let me see, not so much. Stock market, actually a pretty good recovery on the S&P. Not a bad recovery on the S&P, not gonna lie. I mean, the last time I looked at this chart, this was a big fat red candle. So that's pretty nice. Just to run through the watch list, Aussie dollar looking for pullbacks. Pound Aussie looking for pullbacks to the 20 MA. Will we get it? I'm not sure. I have it on the watch list. Let's see what happens. My absolute favorite currency right now, currency pair, is the Aussie dollar. Pound Aussie, not so much. I mean, most of the move has already happened. So the big meltdown, the big sell-off has already happened. Gold, I told you my plan. I'm looking for the EdgeFinder to be bullish. I'm looking for the price to be above the 20 MA. I'm looking for a blue candle on the daily chart, and then it's going to be game on to take an initial buy position. Now, time for the comments. Let me see. Comments. Epstein files. I don't want to talk about it too much, but just search up Bill Gates Epstein files, and you're gonna have a laugh. It's a serious matter, but it's pretty funny what's connected with Bill Gates. I can't join the giveaway. It keeps saying, please wait. It should be working. I have blocked all participants, so I win it, but this is not true. Hello from China. Hello back. S&P Global Manufacturing PMI was better than expected. Shorting gold. Epstein was a trader. Market is in crazy volatility. Setting it out is a position. Okay. Sorry, only one entry is allowed, but I didn't enter yet. Not sure what happened there. What's good? What's the next forecast for DXY? Yeah, we can take a look at the dollar. Any thoughts on the RBA tomorrow? They're hawkish, supposed to raise the rate. Just a sec. Okay. If we look at the Forex factory calendar, RBA is tomorrow and they're looking to raise the rates. Of course, that's connected with the CPI print last week, where inflation came out hotter than expected. So that's what I'm expecting. I'm expecting them to raise the rate. I do believe it's mostly priced in. So I don't believe we're going to get a massive move up on the Aussie dollar. But I still want to buy it. So if I can get in on the Aussie dollar, I still think it's a pretty good play. It's a pretty good position. RBA may do even more rate hikes in 2026. Right now, laying off the dollar, focus on metals indices, turning point BTC to 50. I'm bearish on Bitcoin. Bitcoin looks super bad. Bitcoin just does not look good. So Bitcoin daily chart, here's what's happening. We are at 77K. My personal Bitcoin investment is now at break even, I believe, because I bought on the 9th of November. I think I bought on the 9th of November, or was it earlier? I don't quite remember. Anyway, Bitcoin doesn't look good. You know what else doesn't look good? MSTR, MicroStrategy, Michael Saylor. This is his company, and it's purely based on holding Bitcoin with their equity. Basically, their whole equity is in Bitcoin. Now, this is now around the break-even value for Michael Saylor. So if Bitcoin drops even more, MicroStrategy is going to drop out of the sky. I don't think anything is going to happen to Michael Saylor. Most of these guys have a big cushion of money to save them from anything that's serious. But for MicroStrategy investors, this is super, super bad. So if you're a long-term investor in MicroStrategy, I would recommend looking into the situation and possibly just buying Bitcoin, because it's a much easier, much cleaner process. So Bitcoin, super bearish. Unless we can go back above 100K, I think we are in the crypto winter. We are in the bearish part of the halving cycle. You can search up halving cycle, just ask ChatGPT or Google Gemini, what is the Bitcoin halving cycle? Well, we are now in the bearish part of it until November 2026. So I don't plan on buying Bitcoin anytime soon. Now, time for the giveaway. So let me just see my Google Sheets. You see, today is the 2nd of February. Let me grab all of the names to put them in the wheel of names. Okay, let's do it. Copy. Wheel of names. Paste. And spin. So let's see. We have Wyatt or Nicholas? Nicholas K. Nicholas K is the winner. Let me just check if I have your email. Give me 1 second just to confirm everything. So Control F. Nicholas K. Yes, I have your email. Awesome. So we have everything set up and we can continue with the regularly scheduled program. Nicholas, I'll send you a 10K one-phase DNA funded challenge after my segment of this live stream. If you want to get funded, I mentioned the code A1 Live, 25% off any DNA funded challenge. A1 Live. This is my personal new DNA challenge. It is a 25K two-phase a phase 1. So I lost my previous funded account, part of the game, part of the probabilities, and I still haven't taken a new position. So once I take a new position, you will of course be updated. Yeah, I got my alert here to do a giveaway. That is now done. If I take a position, you will of course be updated. Just join the live streams. I share my accounts on every single live stream. DNA, great firm, great price as well, great offer with our code A1Live, 25% off. Back to the comments. Let's see. Congrats, Nicholas. Yes, congrats, Nicholas. Join tomorrow. If you didn't win today, you can win tomorrow. So I'm streaming for every single day of the week. Let me go back to the comment that I read last. So we had the DXY analysis request, which is a good one. I'm going to do it. Let me see, what else do we have? ISM coming out today. Yeah, okay, ISM manufacturing PMI just printed. Pretty good. Let me see reaction. 1 hour. Minimal. Yeah, minimal reaction, although the beat was pretty nice. I mean, the beat was pretty high. And this is what I have been talking about in the last couple of weeks. The US economy is doing well. The US economy is pretty healthy. The numbers are good. So there's not a massive fundamental reason for the DXY to be overall dropping so much. And we so far have a pretty good mean reversion where we have almost retraced half of the move. Let me see if I do some fibs. Fib retracement. Yeah, we just hit 0.5. So we just hit 50%. Good to know. Looks like we found a short-term bottom right here. Now, how does that impact my analysis? It doesn't really impact my analysis. I still like buying the Aussie and selling the dollar. I still like buying gold, selling the dollar. So, okay, Nikkei catching a bit, or starting to catch a bit at least. I'm still not, let's say, scared to short the dollar. If the other pair, or if the other currency is strong, if the other asset is strong, like gold, like the Aussie, like NASDAQ if it goes up, S&P if it goes up. I actually went short Solana last week. Aussie yen. Bill Gates. Why is RBA raising rates so early? Because they can afford it. Let's do a quick study. Quick study on the EdgeFinder. So we have economic data, GDP, Aussie. Positive, looks pretty healthy. Then we look at inflation, CPI, Australia, elevated. This is pretty bad. This is pretty high inflation, 3.8%. That's the third consecutive print that inflation has been at 3.8%. That's a problem. So they need to hike rates to battle inflation. What about the unemployment rate in Australia? Aussie. 4.1%, that's pretty low. That's really low. If you compare it to Canada, Canada is 6.8%. If you compare it to GBP, the UK is 5.1%. So Aussie economically is doing pretty well. Australia is doing well. The only problem that they have is inflation. They have elevated inflation. So to battle elevated inflation, they need to hike interest rates, and they can afford hiking rates. They won't hurt the economy too much. The economy in Australia seems very stable. And I believe that's the perfect storm to see the Aussie appreciate even higher. If you want to get some targets, a good play would be like this. This is the weekly chart. I base all of my trades on the daily chart, but this is just to make things a bit easier to see. Entry around this swing high. Take profit around this swing high. Stop loss, I don't know, maybe 80 pips. That gives you a pretty positive reward to risk. And I think this is a good play. So if this happens, I'll be very happy to take that trade. Of course, it doesn't have to work. Best traders in the world have 55 to maybe 58% win rate, maybe 60 if they are really, really good. But usually half of your positions will become losses. The most important thing is to keep your winners much bigger than your losses. Gold, will it drop now? I think majority of the drop already happened. So if you look at gold, if you look at silver, personally, I don't think it's going to drop a lot more. I think this was it. I mean, this was it. This was massive. This was a massive drop. From the peak to the trough, minus 21% on gold. Silver, even worse. From the peak to the bottom, what is it? 41%. That is crazy. So I don't think we're going to see gold or silver drop much more. I think it's now time to get it on a discount. So to buy gold on a discount. If anyone managed to buy this wick, congrats. I personally, of course, I'm waiting for my plan. I have a specific game plan. I have a specific checklist. But I do think this level is not so bad. So especially if you get the EdgeFinder in your favor. Unfortunately, it lost the reading. We had a bullish reading and we lost it recently. Let me just see what happened. Of course, if you want to know more about any of the assets on the top setups page, just click on the asset and then you'll see this delta. Looks like we don't have anything specific. So I'm not sure why the score dropped, but I think it was the retail sentiment that changed. I think the retail sentiment changed a bit. Let me see quickly. Crowd sentiment, AAII sentiment. That's more for stocks. Okay, what about put to call on gold? Let's take a look. Gold. Somewhere in between the range. Somewhere in between the range. We were absolutely in the high put volume. Now we're getting back to the high call volume. Retail sentiment. Let's see. Gold. Gold mostly bullish from retail folks. Interesting. Just from my analysis, I think this is a good play to go up. They put the micro in MicroStrategy. What was the PMI release? So we checked the PMIs. Can you look at Swiss yen? Sure, we can take a look. I am Nicholas. Thanks a lot. No worries. I'm going to send you the code. Do we have to fill out the form every day for the giveaway? Yes. So to participate in the giveaway, you have to fill out the form every single stream. Because I only take the applicants from that day. The Google Sheets that we have filters out all of the applicants. Of course, if you do a double entry, we do recognize it, and that's not good. But please do just a single entry per day, and it has to be on that specific day to participate in that specific giveaway, because they have all of the dates and exact times. He's from Croatia. Yes, I'm from Croatia. 22% win rate. My wins are usually over a 6 to 7 reward to risk. That's usually how it goes. Low win rate, massive reward to risk. High win rate, low reward to risk. You have to pick your poison. Tell us your indicator settings. I don't have an indicator. Marco, ICT has a 98% win rate. Yeah, so he is kind of special. We put him in the special section. So yes, there are people having a 98% win rate, and it's specifically the guys that are trading ICT. Been beating the S&P consistently through the years. My losses are very small and lots of them end up in break even. I apologize for not understanding just how amazing he is. Lukas Modric. Luka Modric. So Luka Modric is a pretty famous football player here in Europe. He is actually from Croatia. Okay, let's continue. What did I miss? So I covered my watch list. I talked about gold, talked about silver. Silver is down -7%, but look at how small this actual candle is compared to the previous candle. By the way, there's no concrete reason why this drop happened. I mean, the reason is, I did a bit of research. The main reason is that China stopped buying. So China was buying all the way. China was a massive buyer in the last few weeks. And how do I know this? Because if you look at the activity in the Asia session, you would notice massive gold buying, specifically in the Asian session. What does that tell you? China, possibly Japan. In this case, it was China. I'm sounding like Trump, but this is not what I want. Basically, China stopped buying on Friday, and then we had a massive drop. There's no fundamental, concrete reason why they stopped, at least not that I know of. You can put it in the comment section. It is just people were massively long, everyone was buying, massive euphoria, no one was short. All of the newspapers were talking about gold and silver. Your grandpa and grandma knew about the massive bull run on silver and gold, and that's a perfect time to get out. So also congrats to Nick, because he got out of gold very close to the top. So just an amazing trade for Nick. If you want to know more about his position, join the A1 Discord, because he did the full breakdown of the position in his signals section, and it's pretty entertaining. It's pretty interesting to basically read through the signal. So gold we covered, silver we covered, US stock market. That is something we didn't really cover. So just to browse through the EdgeFinder, NASDAQ, neutral, SPX, bearish. That's a problem. My personal focus is on the NAS. S&P is super close to all-time highs. S&P looks amazing at this level, looks really good. I'm not sure why such a big blue candle today, or even why the sell-off happened at all, because it was a fat red candle in the morning. When I woke up and first looked at the chart, S&P didn't look clean. There's a trend line, seems to be holding for now, but my emphasis, my focus is on the NAS. NAS also has a trend line, although not such a significant one. I would like to see all-time highs on the NAS. For me to be interested, for me to look for buy setups, I want to see all-time highs, and then it's going to be game on. Of course, I would love to get a bullish reading on the EdgeFinder. So far, it's not happening. Maybe in a couple of days or in 1 to 2 weeks, we can get a bullish reading. We can get all-time highs, and then we can look for buy setups. At the moment, not interested. Dow, a bit flat. Russell, pulled back, rejected higher, also seems to be respecting a trend line. Right here, also respecting a trend line. DAX. Whoa, massive candle on the DAX. Why is this happening though? DAX. Not that, but DAX. Bearish. What about the Nikkei? Bearish as well. DAX massively rejecting from the level, from this area, from this support. Am I interested? No. I liked the breakout. I didn't like the pullback. Pullback was massive. If you compare, I talked about the sell America narrative. I talked about money flowing not necessarily out of US stocks, but out of US dollars into other markets, into Europe, Japan, emerging markets, Peru, Brazil, gold, silver. So if you're looking at indices, you want to buy the DAX, you want to buy the Nikkei. But I think the Nikkei looks a lot better than the DAX. Nikkei seems to be in a pretty strong uptrend, while the DAX seems to have broken out of the massive range, which you have right here, broken out, but then massively retraced. So just by price action, just by technical analysis, the Nikkei looks so much better. My focus is on the Nikkei. Copper and platinum. Platinum looks super bad. Copper, I really wanted to buy it. Thank God I didn't buy it because I would get smashed. My main thesis for copper was, I think we had a bullish EdgeFinder. Let me see. Neutral. Let me check the history. By the way, if you want to get the EdgeFinder, you can get a massive discount with my code Marco. Link is in the description. Just use the code Marco and you'll get a pretty large discount. I use it every single day. It's a massive, massive confluence for all of my positions. Nick uses it also every single day. He made a bunch of percentage on gold because of the EdgeFinder, so it's a game changer. But I wanted to see copper. Copper history. Actually, we were not bullish at all. Interesting. I got a bit mixed up. Why do I like copper? Because solar panels are the new big thing. Everyone wants solar panels. They're going to get even more popular. They're getting, let's say, a massive recognition in the energy industry. Silver is used for solar production, but silver is being replaced by copper. So as more manufacturing plants start to use copper instead of silver, what do you think is going to happen? Price of copper is going to go up. I wanted to get in, especially after the big fat blue candle on the daily, but then unfortunately we had a massive drop, massive correction. And this fits what I've been saying about looking for a slower pullback. So you don't want to see an aggressive pullback on the daily chart with massive red candles. What you want to see, preferably, is a slower correction to the 20 MA. That shows you a bit of a pause in buying. That doesn't show you that the sellers are massively pushing the price. It just shows you that the buyers are a bit exhausted and they're pulling back a bit before they step in again around the 20 MA. So good thing I didn't buy copper because I would get smashed. If we get cleaner price action, I'll look into getting in on a buy setup. I would love to get a bullish reading on copper on the EdgeFinder. So I would definitely like to see that. Platinum looks pretty bad, as I mentioned. Oil dropping. Pretty interesting. Is it connected? Well, it's dropping now. On Friday, it didn't move much. I'm not sure what is the reason. Do we have anything on financial juice? Breaking news. Market moving. No, we actually don't have. Yeah, I don't see much on oil. If anyone has an idea why our oil price is dropping so much, because I haven't seen any sort of a resolution between the US and Iran, and I haven't seen any new developments in Venezuela. This is kind of confusing, but essentially, I'm not looking to play it at all. Let's see the score. US oil. Neutral score. Yeah, not really a favorite of mine. DXY, we kind of covered. I don't have a clear path, if I'm being honest. We have rejected massively from this support level. Am I super bullish? No. Am I super bearish? No. What do I mainly think is going to happen? A bit of a range bound play like this. Something like that. Currently, that's my view. So I don't have a clear view. JXY, the yen. What's happening with the yen? What's happening with USD JPY? Totally forgot about that. Right, here's my game plan for USD JPY. This was not an intervention. This was panic selling. So from my research, apparently the BOJ hasn't even started their intervention. This was just the Fed doing a rate check, market participants finding out about the rate check, and then massively selling USD JPY because they have weak hands and they got scared. What were they scared of? They were scared of an intervention. So the markets are recovering. I do believe we can go back to 159 or 160. What will I do at that moment? I will, of course, get in on a sell setup. My last attempt did not get tagged. That wasn't it. My last attempt, I had a sell limit at 159.5, and that unfortunately did not get tagged. If we go back to that level, I will definitely take a sell setup. I think at that moment, an intervention is super likely, and looks like if we do get an intervention, it can be a big one. I mean, this was just panic selling. This is just panic selling. Can you imagine what kind of a drop will happen if you get an actual intervention? So if you get massive orders around low liquidity from the Bank of Japan, crushing the markets lower, I think we can get 4, 5, 6, 7%. So something like this, just a massive drop. I think it could happen, and taking a sell setup should be pretty likely. That's my game plan on USD JPY. Let's put it at 159 just to be a bit better prepared. We're going up. I mean, this is recovering pretty quickly. There's no reason why this chart cannot go back to the initial level in the next 1 to 2 weeks. And then the BOJ is going to be in trouble because they're still doing a dovish policy. So the Bank of Japan is dovish. Prime Minister of Japan, she is dovish. Everyone is dovish. What does dovish mean? Stock market goes up, so I'm buying the Nikkei, and the yen goes down. USD JPY goes up. Of course, the BOJ does not want to see USD JPY go up. So what do? They come in, they sell a bunch of US treasuries, and they push prices lower. That is what's happening. So long term, I'm bearish on the JXY if the BOJ continues to be dovish. USD 10-year not doing much. Let me check out JP 30-year. JP 30-year not doing much either. Comment section. GJ correlation to yen basket. Can you check UK 100? Yes, I sure can. Let's take a look. UK 100. FTSE. Whoa, looks pretty good. Not sure why it looks so clean, because UK has been getting some really bad data. Their economy seems to be doing pretty bad, and the numbers are not healthy. Why is this thing going up? I have no explanation. If you want to buy this, it doesn't look bad. Do we have the FTSE on the EdgeFinder? I'm not sure that we do. We actually have UK 100. Okay, great. So let me filter it. UK 100. Awesome. Neutral reading, which is a problem. But if you get a bullish reading right here, if you can get in on a buy setup right around the 20 MA, I think it would be a great opportunity. Can you see how well the price is respecting that 20 MA? Super nice. One more thing. US seems to be underperforming everything. Check out 2025. Let's put this at the start of 2025. Let's go to the plus button. UK 100. Same percentage scale. DAX, German stock market. Same percentage scale. Nikkei. Same percentage scale. Look at this. S&P doesn't look great. Every single asset seems to be overperforming, and the S&P seems to be underperforming. So can you spot what is the most bullish? I think it's the Nikkei. Is it the Nikkei? Yeah, I think the Nikkei does seem to be the most bullish. So that's why I bought the Nikkei. And I think that narrative is pretty likely to continue into 2026. So what we had in 25, people were hesitant to put their money into the US. People were hesitant to kind of buy the S&P. So they bought the DAX, they bought the Nikkei, they bought the FTSE, they bought gold, they bought silver, they bought Peru, they bought Brazil. They diversified. And I think that the environment is the same. Trump is in office. Trump runs things. Trump is the main guy. He does a lot of threats, tariffs here, tariffs there, creating uncertainty. Well, the last move was kind of good. Picking Kevin Warsh, that was a pretty safe play. That was a pretty sort of a risk-on play from Trump. It kind of put some more confidence back into the United States. It definitely helped the dollar. So that was okay. But overall, I think Trump is still a volatile guy, and he's creating quite a lot of uncertainty. Okay, we do have Alan joining us on the stream. He will do a solo segment. So thank you very much for watching. You can catch me tomorrow. Nicholas, I'll send you an email in 2 minutes with the code for the DNA challenge. For the rest of you, if you want to get funded, remember A1 Live. Just let me write it down. A1 Live gets you 25% off any DNA funded challenge. Thank you very much for watching. See you tomorrow. Goodbye.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. I want to say thank you, Marco, Nick, and everyone else that covered for me today. I was supposed to come on a little bit earlier, but I had to run a quick errand here. But good morning, everyone. Let's go ahead and talk about these markets here. They're moving overnight. We saw the metals market really continuing their sell-off here. They sold off and then they rebounded, and it seems like they're selling off again. So I just got back to my desk literally like 2 minutes ago. So we'll go everything top down from fresh. You guys will do that with me here. So I always like to start with just like getting a holistic view of what's going on in the markets. We do have the dollar index here rising, being the top. And you can see that was pretty consistent in the early morning here. I did see that we did beat ISM manufacturing. So that is awesome. So 52, slight list on this orange one here, but 59, that's still a fantastic read. So yeah, it seems like the US is continuing its upside here. Like I mentioned, metals market doing pretty bad here. Gold actually got up into this 50-day moving average. This was a good level of support. So the question on my head is going to be, was this a perfect by the dip opportunity, or is it going to continue lower? I really don't know, to be honest with you. It seems like silver is leading the way there. But let's go ahead and break down everything. We have dollar Swiss at the top, almost 1% up on the day. Let's see. What's good cycling? What's up, Bashi? New Zealand Swiss is flying. Oh, man, fantastic. Let's go ahead and look at New Zealand Swiss here. New Zealand Swiss. Look at that, man. Congratulations. You're about to hit that 200-day moving average as well. And if I just look left here, this looks like what could be a solid level of resistance. Yep, right up against that 200-day moving average. Fantastic stuff. I believe, if I'm not mistaken as well, that the top status page does show that the New Zealand dollar is somewhere. Look at that. Very bullish reading there, 9 score. So fantastic hit on there. On the EdgeFinder, and congratulations to you. How you doing, Bashi? All right, let's go ahead and talk about the dollar. Let's go ahead and talk about equities and everything, and the metals market here. Why did the metals market sell off? I think we all covered it here. I'm very confident that the other team members went ahead and addressed it. A little bit of strong dollar. You have the Fed pick as well. And then also to metals market specifically, right? You had this very euphoric parabolic run up, right? And that just makes markets very sensitive to anything, right? So it wasn't a matter of if there was going to be a correction; it was just a matter of when. And to be honest with you, the correction could have happened. It could have happened when it happened. It could have also happened over here at 6,000 or 6,600, whatever. But it was going to happen, especially when you add leverage being involved and everything like that. Not to mention, also you do have the CME raising margin requirements as well. So as this thing starts falling down, you do have leverage positions being liquidated, but that extra margin requirement addition there is going to increase the level of liquidations as well. So that's why we see like these very erratic just moves lower here. Silver down as well. Now, the other thing is the Fed pick, right? Fed Warsh. You had Rick Ryder, Kevin Hassett, and Kevin Warsh. And Kevin Warsh was the least dovish out of the three, which was a surprise. In the past, he was a inflation hawk. He was a hawkish person back in the day. He was on the Fed governing board. I mean, he actually left after the financial crisis just because he wasn't a fan of like the stuff that was going on. And so, the market really dissected this as, a hawkish Fed. But in my opinion, I think he's a dovish person. I think he's going to, promote for lower interest rates. But what I think he's a hawk in is going to be reducing the Fed balance, right? And the way he's looking to achieve that is by lowering interest rates to go ahead and achieve that objective. So I think he's going to lower interest rates, but it's going to be a good thing in reducing the Fed balance. And the Fed balance and things like that, the budgets and all that good stuff, that is what ultimately makes people fearful of America, right? You have rising deficits and all this overspending and things like that. So if you can, achieve that by lowering rates, I think that's going to be a net positive. So we'll see how the dollar ends up really going from here. Let's go ahead and see what the comments are saying. But yeah, those are my thoughts on basically the new Fed pick, right? I think he's going to lower rates. He's like a fresh. I think he's a young guy too. I think he's younger. I mean, obviously younger than Powell, but he's kind of going for a regime change in the Fed. He wants to stop using back-looking indicators and look more at forward-looking data. Kind of just approaching it in a different way. So we'll see how obviously the markets are dissecting that information pretty well because you see the dollar getting a bounce there, the equities market as well, which was interesting because I was up late at night and I did see that the equities market was actually like trading lower, like down more than 1% on all of them. But now we're seeing a rebound there. So it seems like we're going to get some confidence in the US. Another added catalyst that could go ahead and propel the dollar, give it some tailwind there would be upcoming data, right? You have more labor data here, which is JOLTS. You have you have services PMI, which is the bigger chunk of the GDP, the growth in the US. And then you have also more jobless claims information. You have unemployment rate. So I'm curious to see how that turns out. Last time we got an unemployment rate tick lower, and the market really loved that despite a weakening non-farm payrolls print. So we'll go ahead and see. Maybe you get a double whammy and non-farm payrolls goes ahead and beats while the unemployment rate stays somewhat subdued. That would be definitely a bid for the US dollar. And then you have some sentiment readings as well. So lots of things happening this week. My current position, I seem like I'm going to be taken out for a profit here. I went ahead and shorted the euro dollar before the FOMC meeting. For a couple of reasons. I thought the Fed, this was more of a speculation, but I thought the Fed was going to be neutral to hawkish. It really wasn't anything. It was more neutral than anything. So I shorted the euro dollar here, put a stop right here above the recent highs at the time, and I'm targeting the 1.7 or the 1,800 level. I did move my stop a little bit more deeper in case we do get a retracement lower, which it seems like it's happening. So I moved it down to the 61.8% retracement level. So I'm actually looking to get stopped out here or take profit at this 61.8% retracement. And the idea behind that is that I'm looking to go ahead and repivot. If we go ahead and hit that 61.8 on the euro dollar, then most likely than not, the dollar index is right here at this 98 handle. And to me, that's another area where the dollar can really go ahead and turn if the bears want to go ahead and take the lead and take this thing lower. If we look at the overall trend in the dollar, it's to the downside here on a higher time frame basis, and even on a somewhat daily trend type situation here. So if we go ahead and hit this 98 handle and we stall out there, most likely than not, we're probably going to head down. The only thing that can obviously counteract that is if we have NFP. We did see a hotter inflation, but we had PPI come in hot. And then before, I believe CPI came in hot as well. So I'm looking to take profits here. I'm going to wait for after NFP, after unemployment rate. And if the 98 handle just blows it out, then I'm going to just wait for, or just somewhat get an entry to trade this thing higher. But if not, then this will react pretty well. And then we go ahead and trade it lower. So, maybe by Wednesday, Thursday, we go ahead and approach this 98 handle and we get the very typical, price action stalls out before the release as, markets are pricing in the expectations, right now, stalls out. And then when the actual release happens, if it's a beat, it goes higher. If it, disappoints, it'll go lower. And if it's as expected, then we kind of just drift slowly in the direction. So that's kind of my play for the dollar. Kind of, situations that I'm looking for. If we were to go ahead and get a stronger dollar, then I'll go ahead and bounce back into the euro dollar short. And I'll probably target, honestly, if I can make it there to the bottom end of this channel here at the 1.1500 level. It's a little bit far out, but I think it's possible with NFP and unemployment and things like that. We'll see how that plays out. If we get a weak unemployment or a net weak outlook, I'll go ahead and look to go ahead and go long Aussie dollar. So, and I'll go ahead and target the 71,500 level. So those are my two things. Another thing I'm interested in playing as well is dollar Swiss, shorting it at this level of what could be resistance if we get to this level. One of the people in the chat, I believe was on Friday, asked me a very, very valid question. I believe it was Eisen, and he said, if I'm looking to go ahead and short the dollar Swiss here at the 7,900 level, why would I not just go ahead and, buy into that and then repivot once we get to the 9,700 level? So essentially, price action was right here. So he was basically saying, why don't I just go ahead and buy into this, take my profit, and then once I get here, just repivot and start shorting? Super valid question, in my opinion. The reason why I didn't want to do that was for a couple. From a technical perspective, you always want to look left to go ahead and see where potential support could lie if price goes against you. And in this case right here, if you just look left, we have open space all the way. And the most recent level of what could be support is all the way at the 7,000 level, right? If we're being honest. And if you measure the move out, it's going to be about 700 pips away. So you have 700 pips of downside to go ahead and try to capture a potential, 100 pips to the upside. So that's basically a 1 to 7 risk to reward ratio, which is not the best. So that's why I didn't go ahead and do that. Now, in hindsight, right, we always think in hindsight as traders, like, dang, coulda, shoulda, woulda. This thing is ripping up 1.02% on the day, but I'm very glad I didn't, because honestly, this trend with the dollar Swiss is pretty aggressive, right? Maybe we fill this gap and then we just pivot from here. Another thing with the Swiss is that it's a safe haven, right? Along with the yen, gold, and silver. The Swiss is a safe haven, especially because you have dollar Swiss in the picture as well. This is dollar versus the Swiss. Another theme that was very constant, persistent, and heavy, during the last couple weeks was sell America. So if you did get a headline or something that kind of, increased appetite for safe haven, dollar Swiss would have really ripped below. And so recently, if you just look at the past, it's very reactive to headlines, especially when the US is the initiating aggressor. So that's kind of why I didn't want to go ahead and play dollar Swiss, but I think this is a fantastic level. Switching my overall bias, I know I've been leaning towards longer term dollar Swiss, and maybe we'll see, right? Maybe I'm absolutely dead wrong. We get to the 7,900 level and we get that strong NFP, strong unemployment, yada yada yada. Services comes out fantastic, so you have growth and unemployment doing well, and this thing just, this was a fake out the whole time. But we'll see. longer term, especially with this new Fed pick, if he's going to proceed with his dovish stance and objectives of lowering interest rates like we kind of anticipate, then perhaps this is a good level of selling. So we'll go ahead and see. I'll play it out here. I'll be looking at the overall picture. I'll be looking at the EdgeFinder for guidance as well. So if I go to the major currencies, let's go ahead and see how. So it's getting a neutral reading, right? So it can go either direction, which is kind of where I like to be at, because you're looking at this with a fresh pair of eyes. The new data will obviously guide us in the right direction. So I'm going to be referencing the EdgeFinder and the overall economic heat map. And to those, obviously the other gentleman, right, New Zealand Swiss was a fantastic example of the EdgeFinder doing this job. That's what I'm going to be using as well. So I would definitely recommend anyone in the chat, if you are hesitant for any reason on getting the EdgeFinder, definitely go ahead and pick it up. It will pay for itself, I promise you. Especially too, if you go ahead and just listen to the live streams, see how different people use it, right? Because you have other people like, for example, Nick, that's heavy and pretty much multi-asset, right? So he can cover, the commodities, equities, currencies as well. Then you have Ivan, which is very specific to like the Forex side of things, and even the yen, which is a very niche currency, right? Some of us call that the widowmaker, and that's a very hard currency to answer, but Ivan uses the EdgeFinder for that. Then you have Marco, which is a blend of technical and fundamentals, and myself included. So buy yourself the EdgeFinder and then just listen to whichever trader resonates the most with you. I promise you will improve. Also, too, join the Telegram channel as well, right? We're posting daily stuff. I posted this early in the morning, basically about the dollar index, the potential level of resistance, the silver market, the moving averages, the potential supports, the drivers behind it. So definitely go ahead and participate. I promise you guys things will be for the better. So let's go ahead and look at the COT report as well. With a fresh pair of eyes. I did see this, during my Sunday video, but we saw US dollar get a little bit of a bump here. The Nikkei was the big one, down 15%. Yeah, 15.58%. But last time I checked last night, very late in the evening, the Nikkei was actually holding up. So let's go ahead and see how that's performing. Wrong one. That's the futures market, the CFD chart. Yeah, Nikkei is holding up here, which is good to see. Swiss franc, that Swiss basket here, I'll go ahead and illustrate this, was getting a net sell minus 2.5%. You can also see that reflected in the dollar Swiss chart, right? Dollar Swiss is getting a bid there. And I think obviously the Swiss basket in itself, so if you look at Aussie Swiss, should be up. There you go. New Zealand Swiss, as we looked at earlier, should be up. CAD Swiss, Canadian dollar spar, getting a bid because of oil prices. Yep, getting a hit up. Euro Swiss. Yep. So you get the point here. The Swiss basket is getting weak across the board. The reason for that, it's no surprise. The Swiss basket is the lowest reading relative to the other major economies. So this is the Eco Surprise Index. This is more for your like short-term traders or like day trading or maybe minor swing positions. This shows the latest economic releases. If you see something in the red, that means they've been missing most of their data expectations. If you see something in the blue, that means they're beating expectations. So the Swiss is the weaker one out of the two. It's actually at a minus or at a 0 score. So it's actually picking up slightly here. So I'm curious to see how that's going to react. Maybe as we get into these important levels like this resistance, could be a good sign. If the Swiss starts picking up some steam, then we can go ahead and short it here. So that's going to be like the one big thing on my radar. Let's see if I'm going to get tagged out of this $0 position. Seems like we're pretty much approaching it. So I'll probably get out of it today if the continuation continues and we start stalling out before FOM or not FOMC, before the big releases like NFP and stuff like that. CAD is brewing something. Yeah, man. CAD is brewing something. Let's see. Let's look. Oil prices, I think last time I checked, down 5%, almost 6%, which is good to see. It's good for the inflation story as well. So if we continue to see oil relatively cheap compared to where we've been in the past, like if I just look at this, this is like 2021, right? So we're pretty much at the bottom end of 2021. If we continue to see that, that's fantastic to see for the inflation story. Man, metals market, this makes me, what's crazy to me? What's kind of concerning, in my opinion, is that we're seeing these big moves in the metals market, right? Like this is insane, but the VIX is in the teens. Like that's crazy to me. I don't know how you guys feel about that copper. But yeah, these big moves, especially like in the equities market too, like overnight, really big moves that we were having, and the VIX is just quiet. Cheryl says same. Yeah. Yeah, I don't know how I feel about that. Really enjoy the Telegram stuff. Yeah, man, join the Telegram, man. It's free value. It's legit free value. You're getting input from myself and Nick and bonus content too, and you know, we do our best, and we're always going to continue improving it. And I think it's going to be, and I think it already is, one of the better Telegram channels where you're getting quality content for free, literally for free. Okay, Aussie dollar. I was looking to pick up Aussie dollar at this 38.2. I guess I'll go over the idea, right? So let's say, and it seems like it's going to happen here. So this is pretty relevant to what I'm going to do here very soon. You have the euro dollar trading lower, going to hit that 61.8% retracement level, or at least it's on track to do so. And so I'm going to be taken out of the position for a profit, and then I'm going to reevaluate what I'm going to do. We're going to get to the 98 handle here on the dollar index if that does happen. And then I'm met with two options. Do I prematurely enter short on this trade, or do I wait for after the release? I'm going to wait for after the release. Depending on the outcome, you know, strong dollar short the euro, weak dollar, I'm going to enter the Aussie dollar. And this is how I'm going to do that. So I'm going to be a little bit creative because recently here, and I've made a reel about it, like a funny meme, but essentially Aussie dollar is something I've been very adamant about. I've been voicing it. I'm in favor of it. I love the trade. However, I keep missing the opportunity to participate. And so I always wait for these pullbacks and I never get them. They're always very shallow. Now, granted, right now we're seeing a quite decent drop here. And this is another reason why I'm being somewhat patient still. If we go ahead and continue maybe a little bit tad lower, I'll be more comfortable. But essentially what I'm looking to do on the Aussie dollar is this is the recent leg. Fibonacci from the low to the high. You have the 38.2, the 50, and the 61.8. Ultimately, I want my position size to be 1%, right? That's going to be in line with my risk parameters. Because this thing just keeps running without me, I'm going to go ahead and open a position here if the data allows it for that to happen. I'm going to put a half position here at the 38.2, and then I'm going to be open-minded to putting another one here at the 61.8. Two things can happen. I get tagged here at the 38.2. I never get the 61.8% retracement level, but at least I'm participating. The second option could be I get hit here, this thing retraces lower, and then I get filled here at the 61.8% retracement level. What that would ultimately do is put my average cost basis right here at the 50% retracement level. So this is where my, if I get tagged in on both, my cost basis will improve slightly from my initial position. And then my net open position will be here at the 50% retracement level. And then I'll put a stop here below this level of what could be support here, or I could even be a little bit more aggressive and just put it here. But I think I like this level better. And then I'll go ahead and target the 71.5 over here. So that's how I'm going to go ahead and position myself. So essentially being open-minded to getting in a little bit premature, less risk, but participating if this thing goes in my favor, or go ahead and just put another position here at the 61.8. If I get filled in, my cost basis improves a little bit, and then I can go ahead and get in position. And then the worst case scenario is that I just get completely stopped out and I was dead wrong on this. But that's kind of the chance that we take here as traders. So yeah, basically my idea here for the Aussie dollar. And at the moment, it's still a very valid trade setup. So if I go to the top setups page, let's confirm here on the, yep, so getting a bullish reading here on the EdgeFinder. And if I go to the macro only, let's see if that's consistent. Yep, getting a bullish score here, even on the macro as well. So, excuse me, fantastic reading here. I like the macro score, the macro only page is one of my favorite ones, just because the technicals are subjective to the individual, depending on your trading style. Now I'm a swing trader and I use the major moving averages. So the top setups page, matters to me. But if you're like looking at, if you're just considering like which currency pair is strong, is weak fundamentally, but you want to like be intraday, you want to scalp, and you don't want to consider the longer term technicals because it could be somewhat lagging, I would highly recommend the macro page. It's fantastic. And then you can just look at this on a lower time frame basis and just know in the back of your mind, like, okay, the bias here is bullish for Aussie, weak for the US, and then you can go ahead and play that as you wish. So that's one of my favorite things. Do I trade options too? I do not trade options. What do you think about jolts tomorrow? Hit or miss? I tend to just go with the overall consensus because they're usually right or ballpark around there. So as long as it's not like a drastic beat or miss, market should be okay. No, obviously there's also underlying factors to that as well, like narratives that could influence this. So like if you already have, for example, right, like a sell America theme going on. So markets are already like kind of on the fence of selling the dollar, and then you get another confirmation of that with like, a slight miss in the jobs market or something like that, then obviously that can fuel more selling in the dollar. But for the most part, like if things are stable and we're just basically going off of hard data releases, I usually just tend to focus on what the analysts are expecting, and they're usually right for the most part. But we're looking for 7.25, so not the biggest change from the past. So I kind of go play it by ear. In my opinion, Bashi, though, I think markets, despite this, are going to be a little bit more focused on Thursday and Friday. You have services, which will be a great hint as to what the growth picture is looking at for the US. So there's services and manufacturing. Today we had manufacturing, still great nonetheless, right? Markets reacted very well to that. The dollar index caught a bid there. But services makes up the major component of the growth sector in the US. So if you get a fantastic growth in services, then that's definitely going to go ahead and fuel equities for sure, the dollar. And I think the big one, of course, is going to be that that's February 6th, where we get NFP and all that good stuff. But also, too, you have to think about it, right? In currencies, we're trading two currencies at a time. So on the 5th, you do have BOE bank rate, which they're looking to go hold the rates, which is, I'm sure we can all agree on that. But the forward guidance with the rate statement will be actually the driver behind that. But yeah, I think markets will pretty much stall out by Thursday, and they'll be patiently waiting for Friday. How do you position size when you DCA, since the width of the stops are different on both? Yeah, I mean, essentially my stop loss sizes and everything like that is pretty dynamic. But for the most part, I don't really DCA into currency positions. I usually only open like 1, 2, maybe 3. For example, like euro dollar, right? I could really much care less at the specific price level. I just want to get in if I see this thing turning around. So I got in right here, which is like in hindsight, a fantastic level. Like I'm glad I got in here. You could say it was early, right? But it was a risk, right? It was premature to the Fed meeting. And then I just add here along the way if it's going against me. But for the most part, I'll give you a good example. An example that didn't work, but a good example nonetheless. Dollar Swiss, right? It's not that I'm necessarily DCAing. I just want to be able to participate. So this was a position where, you had positive swaps in my favor, good technical levels here. So I just want to participate. So I just like entered here. I was opening to enter here, but ultimately just trying to get filled in any chance I get. And obviously, if it goes against me a little bit, that's to my benefit, as long as we don't break the structure. This was a loss for me, a good loss for me as well. So that's kind of basically how I approach it. But there's really no like scientific way that I go about it. Really, it depends. If I'm like getting positive swaps and my time horizon is predetermined to be somewhat longer, then I could care less about the actual level specifically. However, if I'm going against positive swaps, things like that, and like I'm already following the trend, like it's no longer at these extreme levels of the channel. Like if I'm trying to for example, if I'm trying to short the dollar Swiss and we're not at the top end here, like let's say I'm just following the trend. So we're not here, but we're more so like right here in this level, and I'm just trying to participate in this little wave down. Then at that point, I'm not going to be DCAing. I'm just going to be very strategic, using like a 4-hour time frame and just trying to time a pullback with a moving average or something. But for the most part, I'm trying to catch these broader swings. Much love, Alan, for your segment. Thank you, Lex. I really appreciate it. You want a weaker dollar? Yeah, I mean, if the weaker dollar play does play out, I think it'd be fantastic, right? Especially like, for example, dollar Swiss. We measured out the move. We're 700 pips away from the next level of what could be support if buyers step in. And then, upside, you have basically all this movement here, but that's still a fantastic way to go about it. Aussie dollar too, it's proven itself that it's able to break out of this weekly level of resistance. So this was a fantastic level. It held up most of the time. We broke above it. We almost got to the higher end of that level of resistance, which is that 7,200 level. Got there almost, not quite. We pulled back, but the weekly candle still printed green, which is a good sign for me. So I'm really open to repivoting if the fundamentals, if the employment numbers allow me to. Then I would love to participate Aussie dollar, getting up to the that 72 handle. I think that's a fantastic trade. But yeah, it seems like the dollar narrative, the dollar confidence is coming back. Again, for the Fed chair pick, supposed to be dovish, but he's trying to attack the Fed balance sheet. So he's going to essentially lower interest rates to go ahead and achieve that objective. So I think it's going to be a net positive. So yeah, maybe we get some dollar bearishness here, right, in the short term. But the overall picture is that the people are more confident in the U.S., getting rid of a QE and all that good stuff, and just a little bit more confidence. And I think that'll ultimately be very good for the dollar and for the U.S. economy. So I'm pretty much pro-America. I'm always going to be pro-America, but basically that's how my stance is as far as trading and goals and all that good stuff. But this is the end of my segment, guys. Again, join the Telegram channel, please. I will be more than happy to have you here. Get yourself a copy of the EdgeFinder. And have you guys a blessed rest of your day. Stay safe out there. Metals markets are still moving heavily. Bitcoin's getting a little bit of recovery here on the support level, but yeah, markets are choppy. You got the VIX staying low, which is scary. So even if you get a slight pickup in the VIX, that could be more fuel to the fire. But yeah, man, take it easy. Have a blessed rest of your day and trade safely. Bye-bye, everyone.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.